Welcome back to the deep dive. It is Sunday, February 15th, 2026.
A Sunday recording session.
It had to be done. If you've been glued to the terminals this week, you know exactly why. AbbVie just dropped their 2026 guidance.
And the numbers are, well, they're making a lot of people look a little foolish.
To put it mildly, for years the story was just absolute doom. The patent cliff, the end of Humira.
It was supposed to be the end of the line, a classic case study in value destruction.
Exactly. And that's our mission today. We're going to dissect how a company facing, the biggest patent cliff in history, losing a $21 billion drug, didn't just survive.
They seem to be thriving.
They are. And I'm looking at this from a macro perspective. I see capital cycles every day. And usually when a monopoly like this dies, the company shrinks. It's, the law of capital gravity.
But AbbVie is defying it.
It really is. So for me, this isn't just a drug review. This is a case study in capital allocation under just extreme pressure.
And I'm here to look under the hood. Because the spreadsheets look great, but the real story, the moat, is in the molecular machinery.
Right.
I've been digging into the specs on their manufacturing yields, the engineering behind their new delivery systems. While everyone is looking at the PE ratio, I'm looking at the engineering that makes those margins possible.
Love it. We've got a stack of sources here, from earnings call transcripts to some deep analyst reports on their facilities. But before we get into the weeds, I want to tease something.
Okay.
There's a connector moment we found. It involves a political deal, some tariffs, a factory in Arizona. It sounds boring, but when you connect the dots, it might just be the secret sauce to their entire operating margin.
It's a classic case of looking where no one else is. It's not in the headlines, it's in the footnotes.
Exactly. Okay, let's start with the ghost in the room, Humira.
For a decade, that drug was the sun. The whole industry orbited around it. $21 billion in peak revenue.
And the consensus was, when the biosimilars hit, AbbVie is toast.
And statistically, that should have been true. A small molecule drug goes off patent, revenue can drop 90% almost overnight.
Humira is a biologic, so it's stickier.
Right, but the erosion has still been brutal. It's down to, what, about $3 billion in the new guidance? That's an $18 billion hole in the P&L.
An incredible hole. So the cash cow is gone. But here is the rebuttal. Let's look at the 2026 projections for the replacements, Skyrizi and Rinvoq.
The numbers are, frankly, staggering. Combined projected revenue for 2026 is $31.6 billion.
Wait, pause on that. 31 million?
31.6, yeah.
That's not just replacing Humira. That is 50% higher than Humira ever was at its peak. How is that even possible? Are they just jacking up prices?
No, it's volume and, more importantly, technology. And this is where we have to get a little technical. It's not just about the molecule anymore. It's about the delivery.
You mean the Skyrizi on-body injector?
Exactly.
This is for psoriasis and Crohn's, right?
Yeah.
So explain it. Is it just a fancy syringe?
Not at all. It's a wearable. You have to think about the patient. The competitors offer a standard injection. It's functional, but it's a hassle.
Yeah.
It's like driving on a dirt road.
You get there, but it's not pleasant.
Right. It's bumpy, it can be painful, it's easy to skip. AbbVie engineered this auto-injector that sticks to the skin and delivers the dose seamlessly over a few minutes. It's the 10-lane superhighway of patient compliance.
So they're selling a user experience, not just a chemical.
Precisely.
Yeah.
And that creates a moat. It's way harder for a biosimilar company to copy a complex device-drug combo than to just copy a liquid in a vial. But the real magic, the part Wall Street misses, is the manufacturing.
The yield. You were telling me about their facilities in Singapore and Ireland.
Yeah. Yields is a term we usually hear in semiconductors.
Right. What does it mean in biology?
It's surprisingly similar. Look, manufacturing small molecules, like aspirin, is like baking cookies. You mix chemicals, you heat them up, you get a pill. It's predictable chemistry. Biologics are like growing a prize-winning orchid garden at an industrial scale. You're using living cells, usually Chinese hamster ovary cells, to excrete these complex proteins.
It sounds incredibly delicate.
It is. If the temperature, pH, or nutrient flow is off by a fraction, the cells die or stop producing. The industry standard yield might be, say, 2 grams of antibody per liter of fluid.
And AbbVie?
My analysis of their new bioreactor setups suggests they're hitting 5 or even 6 grams per liter.
That doesn't sound like a lot, but...
It's massive. It's triple the efficiency. That means for the same amount of electricity, labor, and raw materials, they get 3 times the product.
Which crushes their cost of goods sold.
Exactly. And that is why they can maintain pricing power even as the volume explodes.
Which brings us back to the financials. So $67 billion in revenue for 2026. That's up 9.5%. But the number that really made me sit up is the operating margin. They're targeting roughly 48.5%.
That's tech company territory. That's not a pharma number.
It's not. And this is the valuation re-rating I'm talking about. The market priced them as a melting ice cube. These numbers prove they're a growth machine. But, and here's my skepticism, how are they protecting those margins? The political environment in 2026 is, let's say, hostile to high drug prices.
And this is where we get to that connector moment you mentioned at the top.
Okay, so picture this. You have the Trump administration in the White House. The pressure to lower drug prices, especially for Medicaid, is just immense.
And you have the whole America First manufacturing push. Tariffs are flying.
10% across the board, higher for some regions. Most companies were panicking, but not AbbVie. They did something brilliant. There was this boring news item about them agreeing to lower Medicaid prices and pledging $100 billion in U.S. manufacturing.
Which on the surface looks like a loss, right? Lower prices mean lower revenue.
Of course, but you have to connect the dots. They took a price cut that cost them maybe $600 million a year, a rounding error for a company this size. But in exchange for that, and for promising to build plants in places like Arizona, they used a provision in the America First healthcare initiative by designating their Arizona plant a domestic supply chain anchor.
Ah, I see where this is going.
They got an exemption on tariffs for their active pharmaceutical ingredients, the raw goop that they import from Ireland and Singapore.
That's the arbitrage.
That's it. Do the math. A 10 or 20% tariff on their supply chain could have cost them billions. They traded a $600 million price cut to save $3 or $4 billion in potential tariffs.
It's a political moat.
They basically paid a toll to build a wall around their operating margin. It's brilliant.
And that U.S. manufacturing part isn't just political cover, you know. It gives them real supply chain dominance. We're seeing a shift to these high-viscosity drug formulations. You need specialized pipes and filters to handle that stuff.
So by building it in Arizona,
They ensure that even if a competitor gets a similar molecule, they can't produce it at the same scale or reliability. They win on politics and they win on physics.
lethal. But look, I'm not letting them off the hook. I have to put my skeptic hat back on. Let's talk about Cerevel.
The neuroscience gamble.
Right. They spent $8.7 billion. The crown jewel was supposed to be emraclidine for schizophrenia. And what happened?
It failed phase 2. The data just wasn't there.
It flat out failed. So I have to ask, as an investor, did they just light $9 billion on fire? Are they just trying to save face with whatever's left in that pipeline?
I genuinely don't think so. I think the deal is salvaged by one drug, tavapadon.
The Parkinson's drug. Okay, convince me.
The biology of Parkinson's. Patients take levodopa. It works, but it's a roller coaster. It spikes their dopamine, then it crashes. They get these horrible off times where they freeze up or shake uncontrollably.
The on-off phenomenon. I've read about it. It's debilitating.
Exactly. Tavapadon is a selective D1-D5 receptor agonist. Think of it this way. Levodopa stomps on the gas pedal and lets go. Tavapadon is like cruise control. It binds to the receptor and keeps that pedal pressed down steadily, 2-T7.
And selective usually means fewer side effects, right?
Correct. By targeting only D1 and D5, it avoids the side effects like hallucinations that other agonists can cause.
And the data backs this up.
The Temple 1 trial data was extremely strong. Big improvement in motor scores and, crucially, a massive reduction in that off time.
So what's the potential here? $1 billion drug.
Easily. We're looking at a blockbuster, probably $1.5 billion in peak sales, with a 90% probability of approval.
Okay, so if you discount that back, it covers a huge chunk of the acquisition. It's not the home run they wanted, but it's a solid double that protects the portfolio.
Exactly. Salvages the deal and diversifies them into a real neuroscience powerhouse.
Speaking of powerhouses, we have to talk about obesity. You've got Novo and Lilly fighting what looks like World War III over Ozempic and Mounjaro. Is AbbVie just late to the party? Did they miss the boat?
They're late, for sure, but they might be fashionably late. They have a compound called ABBV 295.
And why would anyone switch? The market seems saturated.
Because the mechanism is different. It's not just a GLP-1. It uses an amylin analog.
Amylin. Break that down. Why does that matter?
So GLP-1s tell your brain you're full. You stop eating. But when you do that, you lose everything, fat and muscle. We're seeing people lose 20 pounds, but 8 of those pounds are lean muscle. For a 70-year-old, that's dangerous. That leads to frailty, falls, broken hips.
So amylin is muscle sparing.
That's the theory. The data suggests it signals the body to prioritize burning fat while preserving muscle. It's the difference between starving yourself thin and optimizing your body composition.
No, I saw headlines saying it only showed 3% weight loss, which sounds pathetic.
That was classic media misreading. You have to look at the footnotes. That 3% was from a single dose, one shot.
Okay.
The multi-dose data showed a 7.7% loss in just 6 weeks.
7% in 6 weeks. That puts them right back in the game.
It does. And if you combine that with the muscle preservation, think about the elderly, people who cannot afford to lose muscle. AbbVie doesn't need to fight a price war with Lilly. They can carve out a premium niche.
Don't fight the commodity war, win the specialty war. Smart. Okay, let's pivot to something that feels like pure science fiction. Gene therapy. RGX 314.
For wet AMD, macular degeneration. This is one of the most exciting things in their pipeline.
Right now, the standard of care is just awful.
Yeah.
A needle in your eye every 2 months.
It's medieval. And you have to do this forever. If a senior citizen misses an appointment, they can go blind. RGX-314 is a one-and-done treatment. It uses a virus to deliver a gene into the retina.
So you're reprogramming the eye itself.
Exactly. Your eye becomes a factory that produces its own medicine permanently. It transforms a service into a cure.
That's incredible. But I'm seeing reports about a competitor, 4DMT. Their safety data looks cleaner.
It is a valid concern. The 4DMT data shows lower rates of inflammation, which is a big deal inside the eye.
So is AbbVie betting on the wrong horse here?
It comes down to speed. AbbVie's in phase 3. They have pivotal data coming in Q4 of this year, 2026. 4DMT is behind them. In biotech, being first often wins the standard of care designation.
So be first, establish the protocol, own the market.
That's the land grab. Even if something slightly better comes along 2 years later, it's hard to displace the incumbent.
All right, let's zoom back out. We've covered the tech, the politics, the pipeline. What does it all mean for the bottom line? We're looking at $18.5 billion in projected free cash flow.
An immense amount of dry powder.
It is, and they're trading at a PE of around 15.2. The industry average is 18.
That gap tells you the market is still skeptical. They
Yeah.
still see the ghost of Humira.
But the market is just lagging reality. I call this a structural inflection point. The market priced AbbVie as a company falling off a cliff. But the 2026 guidance proves they built a bridge. If you believe that bridge holds, that valuation gap has to close.
And you get paid to wait for it to close.
Exactly. Dividend king, 53 years of increases. The yield is about 3%, and they're projecting another hike later this year.
I should mention the one drag, just to be balanced, aesthetics. Botox is fine, but Juvederm, the fillers, is struggling.
The lip filler recession.
Right, it's the economy, it's discretionary.
Sure, but frankly, I think that's noise. Aesthetics is what, 9% of revenue? If immunology and neuroscience are growing at double digits, who cares if lip fillers are flat?
It's a rounding error on the free cash flow.
It is. So let's wrap this. We started with the mission. Did AbbVie survive the patent cliff? I think the answer is a definitive yes. They transitioned from the Humira company to this diversified giant.
It's a triumph of pipeline management. They replaced a blunt instrument with these precision tools like Skyrizi and Rinvoq, and now they're adding these cutting-edge layers on top.
And from my seat, it's a masterclass in capital allocation. They used Humira's cash to buy time. They used political savvy to build that margin moat. They took their lumps on Cerevel but salvaged the value.
It shows they can play the Washington game and the R&D game at the same time.
Exactly. So here's a final thought for you to chew on. Everyone is watching the obesity wars between Lilly and Novo. It's all anyone talks about.
Right.
But with RGX-314 and their new cancer platforms, is AbbVie quietly building a monopoly in markets that Wall Street hasn't even modeled yet?
That is the multi-billion-dollar question, isn't it?
Because if that gene therapy data hits in Q4 and it works, the entire valuation equation changes overnight. You're not valuing a drug company anymore.
We're valuing a gene editing platform.
And that is a very, very different multiple. Keep your eyes on that Q4 data drop. It's going to be a wild ride. Thanks for listening to The Deep Dive.
I'll see you next time.